Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. It's a holiday here. We are the second oldest country to outlaw slavery. And we have a holiday for that now for the last 3 years. It's called June 16th. Juneteenth, I think they call it exactly. We outlawed it in, I guess, 1860. We tried to outlaw it in 1776, but the king wouldn't let us go with that. And then when we finally got independence, it became even harder to outlaw it. They couldn't make up the right minds of what to do and what not to do. So like half the states, it was left up to state rights in the end result. So today is a national holiday, and we, let's see, what do we say here? So what we have is there's a few markets open. Obviously the currencies are open, and the electronic stock market is open. And I believe, some of the future contracts, not all of them, like I think natural gas is open. I know crude oil is open. I know that heating oil is open. And I think we have trading in gold too at the same time. So, but there's no stocks, and the markets are thin. We are about 70% of the world market. So, in other words, most traders are like myself doing other things and enjoying the idea in the beginning of a summer month, possibly. In other words, it's going to be in the I guess we'd say in the 25 degrees over Celsius, something like that, 22 degrees over Celsius today, and sunny. So people were out there boating, and some are probably even tried to turn it into 3-day weekends or 5-day weekends. And it seems that it's like the 4th of July. Whatever day it comes on, that's the day we celebrate for the signing of the Declaration of Independence, or declaring independence, that is, and signing it. And so that's where we are, and that's what's going on. Let's see what the chat line says. Let's see if anybody is visiting and saying hi. What you up to, Doc? I'm up to farming myself today, doing a few other things, working with a friend that has solar collectors. I'm trying to add a few more solar collectors to his array. Things like that, goofing off, playing with some concrete possibly. It's hard to say, and we'll figure it out as time goes on. But here I am doing a webinar because, the markets philosophically didn't stop. They're still pulsating along. We still have a Fed that, it was even more. We saw another story, and we'll probably try to bring that out too, about the BLS stats again. We talk about it, how the BLS stats are just, very bad, especially in labor. Hey, Robin. And so, that's going to be an issue. It keeps on becoming an issue. And there's probably even more articles starting to evolve in that situation. It's like, wow, crazy times. That's pretty much what it comes down to. Crazy times. And so, there's not much more we can say about it than that. Let's see now. Let's go over and let's just see. You can see there we have the dollar index up there. And it is trading electronically. So you can see a little red right there for today. That's the 18th. Or maybe, let me just double check it. But I believe it's trading electronically. So, yeah, that's the 19th. So there's a trade out there. You can see we've been in a daily buy for a few days. And you can see now there's the weekly buy. We've been in a weekly buy now. 1, 2, 3. And we're starting a 4th week in a weekly buy. In some ways, it's trying to remind us that Mr. and Mrs. Interest Rate is not coming down. Interest rates in America are transitory. And so, as the vernacular of the Federal Reserve and the Treasury, U.S. Treasury, or as you would know it as the Finance Minister and our Premier or President or, what's that other one they use for Parliament? Our parliamentary leader. Basically all thinks of things as transitory. In other words, they're here, and then they're going to be over there. And then when they're there, they'll move over down the road over here again, and then over there again. And so interest rates are transitory, and none of you should be nervous about that. It should be okay, And chances are interest rates will come down a little bit just because of a more than likely a more responsible government. That will help right there alone. And as you can see with the Spanish energy company, speaking of which, let's take a look at that. I'm curious to see where that's at today. And there it is right there. Still down, but not breaking the 20 yet. I guess now, as they would say, you like to see how the rubber meets the road. So in other words, they will now they've discounted the socialists are out of power, and there's a half of the haircut, I guess, is gone. That's what we would call it on the trading floor, a haircut. And so I would imagine we'll see 15 or something like that if the European Parliament does positive things. It allows freedom and free markets and free people and free opportunity for businesses to grow, something Europe has not really seen. I heard an analysis of the European market a couple days ago. Someone was saying the bulk of their indexes are bank stocks. So in other words, you have a Siemens, and then maybe I guess you have a Volkswagen, Porsche, and then you probably have steel, and then after that, a lot of the industries start to drift. In other words, they're smaller and they're not globally competitive as much as they used to be because of the shrinking of their economies by socialists who want one company for each sector, and they want that company to be owned by somebody that believes in the same things they do. And that's not how you get an Apple computer or a Microsoft or an Intel or a Tesla, or I can keep on going on, NVDA. That's not how you get those things. Those things are from kind of like outlaw thinkers, inventors. And for everyone that has won and succeeded, there's 1,000 that have failed. And so socialism tries to remove all that failure. And when you remove failure, you remove success. And that's something that you can't get through their heads. They just don't seem to understand that. And so now that the European Parliament is center-right, you may start to see much more capitalistic, much more freedom, much more free people, much more free markets, much more free ideas, and free businesses to grow away from the tyranny of one size fits all. There you go. All right. So from there, let's take a look at the euro. I saw it this morning. It was looking relatively firm right there. And let's put it up over here. And there is, well, that's the Great Experiment. Let's go to the euro right there. There's the euro. You see it's trying to push up. Matter of fact, now at this point, they're showing that yesterday closed in a buy. So let's grab one of these greens and move it over like that. It's in a buy. How about that? So, a little strength there, huh? Surprise, surprise. And you can see we're still in the weekly sell for one full week. You see both are underneath the manifold right there. So, not exciting exactly. Maybe this is another dead cat bounce and then another drop. I kind of want to believe that this here and this there is going to be more supportive than people realize. Solely because we're in the election season and free markets and free people is on the menu. And so that menu says that the free market, free people, free business to try to be business and fail, creative destruction, is leading deeply now another poll came out. I might have mentioned it yesterday. Iowa is now, he's 18 points ahead of the president. So the former president is 18 points ahead of the existing president. And so that says a lot because it's a very middle of the, Missouri used to be the neutral state, kind of like a red and blue, and Iowa was the same way. I think they still have more Democrats registered than Republicans, but they keep on wanting to vote Republican. They have a Republican governor, and they have 2 Republican senators, and so they realize that the old Democrat Party has lost its way and doesn't seem to be able to find the door or the window or even the couch and the bed or the chair. They can't find anything anymore. They're lost. And so there you see there the euro is trying to lift up. We got 2 green dots too, which is cool. It's trying to be a little bit more aggressive in the sense of trying to lift. Uh-oh, what's this? The music just stopped. Japan banking giant Norwegian to liquidate $63 billion in treasuries, European bonds to plug massive unrealized losses. See, that's interesting. Let's dance our way over to see that. I like looking at stories, unless someone has something they want to look at today. And there it is right there. How about that one? Throw that up on the screen. The music is stopped. Yeah, they call that the in trading world. In other words, in the markets and so forth, currency traders, they call it the $20 trillion carry trade. $20 trillion carry trade. Boy, being labeled that can be freaky. See if we can get rid of that advertisement. I don't understand what that advertisement is, but that's all right. They see it right there, and I'll highlight it again. So there it is. The music stopped, and Japan banking giant Norwegian to liquidate $63 billion in treasuries and European bonds to plug massive unrealized losses. Wonder what they lost it in. Would you like to know? Let's see. Last October, when the wounds from the March 23 bank failures, which sparked the latest Fed intervention, settling the markets nadar over the last 16 months. See, the Fed's been pumping do-re-mi into the market. That's why the stock market is lifting and lifting and lifting. Okay, they lost those. Japan to stress test banks for risk of Silicon Valley Bank-style crisis. Financial watchdog to assess lenders' abilities to handle surges and withdrawals. And it says here, we made a non-consensus prediction. We said that the Fed has once again backstopped the U.S. financial system. The next bank failure will be in Japan, and sure enough, it has been. And see, so the prediction only got warmer 2 months later when the inexplicably Japan's Norwegian Bank, has best known as Japan's CLO whale, collateralized leverage obligations, was quietly added to the list of counterparts for the Fed's standing repo facility, aka Fed's foreign bank bailout slush fund. I keep on saying that to you, traders, and and I know it sounds like I should be wearing tinfoil on my head. I know that, but it's a fact, and it's happening, and there's no running away from it. And the Fed holds up the markets. It's why it's very disingenuous when you listen to the financial channels and they talk about history. Oh, the average and the cycle, and it's always been that way. It's like, no, it has never been that way. Ever since 2009, the Federal Reserve now is the buyer of last resort. It is the old specialist system. It is J.P. Morgan. It is Cornelius Vanderbilt. It is the system that is holding the marketplace up. And that's why funds, retirement and hedge and so forth, are always undervalued at this point. They're terrified. They know that it's being held up, and they won't say it to their clients, and they pretend all the time like it's normal. Let's see. But if this was the first and still distant sign that something was very wrong at one of the Japanese biggest banks, Japan's fifth largest bank, with 840 billion in assets, today the proverbial canary stepped on a neutron bomb. Oh boy, how about that, huh? Look, there's unrealized gains and losses. All FDIC insured institutions. Look at that. Look at the drop. There's 2008. I mean, they're really, look at that. Available for sale securities is the light blue. Held to maturity securities, which means no one's willing to buy them. That's what that means. So, held securities that are held to maturity means there is no market. There's no bid and offer. So you see the dark blue. It goes from, in some spots throughout the last, I guess these are quarters. This is quarterly, right? So it goes from 300 billion to 675 billion, almost 375 billion, almost a little bit more. I'm sorry, a little bit more. That could be more than could be over 400 billion is not liquid. In other words, you own it, you try to sell it, there's nobody to buy it. That's it. You have to hold it to maturity to get your do-re-mi back, which could be 20, 30, 40 years. It could be something like that. Japan does have 50-year bonds. I think they have 100-year bonds, too. So some investors will have to hold it and pass it along. And I remember them changing the law in Japan a while back, saying that they could leave mortgages and things like that to their relatives. So in other words, you have a house, you have a mortgage, and it's not paid off, you die, and your family picks up the liability, which is all right, instead of it going into the open market. So that was a smart move. So that's the magic of the Federal Reserve and the buyer of last resort. They can step up and help everybody. Let's see. Japan's investors, I want to read that one. Let's see. To reduce unrealized losses in its bonds, which totaled roughly 2.2 trillion yen at the end of March, OKU explained banks' intentions to shift its investments, saying we will reduce sovereign interest rate risk and diversify into assets that take on corporate and individual credit risk. I guess that's so they can liquidate them. I don't know. Holds as much as so that's a wonderful story. It's what I talk about every day here. Why I love doing the webinar every day, because I get a chance to tell you the truth. And then when the talking heads that you turn on to CNBC or Bloomberg or Reuters or API or Financial Times, what other places? It's like they all hide the facts. Oh no, things are good. Stock market's great. It's going up. Maybe it's a little overbought. A little over. The haircut could be as much as, let's put it this way. On that chart, over 50% of the products are illiquid. You have to hold them until they come to maturity, be it 1 year or 100 years at this point, depending on the length of the bonds. Well, if it's that way with the bonds, what is it with the stocks? How overpriced are the stocks? Are they 35% overpriced, 40%, 50% overpriced? It could be anywhere's in there, and money managers know that. So that's why they buy the hottest thing that has the fastest growing money. That it's like the pyramid game. Who's going to get stuck at the top where there's nothing left. All right. So from there, since we had a little news, we'll go to the let's go to the cable. Let's see what the cable looks like today. Cable's trying to get into the buy today, not yesterday, right there. And the weekly seems to be moving away. That's what we thought. We said that in the beginning of the week because it's so tight. And sure enough, it's doing that. The algorithm is reading the supply and demand, the buy and the sell, the longs and the shorts. Our algorithm is reading all that stuff and telling us, maybe we shouldn't sell that thing. Maybe it's a good thing, Maybe it's going to be a great thing. And there it is right there, cable. I've removed the little red or pink circle, and it's just marching along, doing fine. All right, and then from there, the cable will go over to the inflation fighters. Right there. Look at that. They've been buying Swiss now for a while. It's like a safe haven, whereas all the other currency pairs have been being sold, not the Swiss. Why I'm a big Swiss fan. So. All right. It's interesting. There's one about our fearless leader, our president. It says that your lying eyes, corporate media panics with fact checks over Biden's obvious decline. All right. Oh, that's cool. What else we got over there in the news? Maybe something else we could relate to that we talk to about here. I talk about that here all the time too. Let's see. Problem with Juneteenth. Oh, there's the holiday. Let's show you the holiday. The problem with Juneteenth. Well, it says here, today in Juneteenth, 159 years ago, on June 19th, 1865, the Major General Gordon Granger arrived in Texas, declared that all slaves in the state were free. And, we're like, I think it was 1850 something, England outlawed slavery. And then the rest of the world, uses it. China uses it, and Africa uses it, and the Middle East uses it, and there's slavery in a lot of places in the world. There's more slavery than non-slavery. Let's put it this way: Europe doesn't have slavery. You guys outlawed it somewhere along the line. I'm not sure where, but it's outlawed in Europe. I wonder when you guys outlawed it. It's hard to say. Juneteenth Independence Day Act. The holiday has become increasingly co-opted by progressive media, academia, politics as a way to push for radical policies like collective reparations and the exclusion of white people from celebrations. Yeah, all right, that's the way it goes. All right, I'll just take the trading holiday. That's just good with me. But I always say it here. I've said it many times. America's the second oldest country in the world that outlawed slavery. It's over 200 years ago now. And so 2 centuries back, that's for sure, 170 some odd years ago. So 2 centuries back, we outlawed it. We tried to outlaw it in 1776. The king knocked it down, and then when the king knocked it down, the loyalists stayed with it. And so those loyalists, that's what the Civil War was all about, basically, is state rights versus not state rights. And it should have been the federal government should have paid the states that didn't want to outlaw it, should have paid them money, and it would have been cheaper, since we spent an incredible amount of money for the war, that it would have been cheaper to just buy every slave at top dollar prices, and all slave owners could have gone and retired. Let's see, what else we got going on there? Well, we go from the Swiss down to the yen. How's the yen acting after that? Look at that. This was probably a month back, was it? Yeah. They knew someone knew around here, taking it up, that there was going to be problems with that bank. And then the Federal Reserve came in and protected them. And now it's just drifting slowly up to that area again. So, let's see, what else have we got going on? I don't see any other particular news. Let's see. Texas sees 74% drop in illegal border crossings since Operation Lone Star, where they put barbed wire fences up. Let's see. Germany moves closer to AfD, man. Wow. Green claims party is security risk for people and democracy. Really? I thought they were into free markets, free people. So they don't want to be socialists. Okay. What else we got brewing here? Someone's cattle got loose, and I'm answering him. He's brought in the cowboys to try to collect them up. This afternoon. Let's see. Let's see. Let's see. In Mannington, maybe? There we go. Do I have a horse? He's asking me, you have a tranquilizer or a horse and a lasso? Good Lord. There we go. Anyhow, where do we go from there? There's the yen. I mean, the yen's not really panicked over that news, so that tells you that they've known all along, and everything is pretty much, under control. Look, when you have a Federal Reserve that has as deep a pockets as it, you can calm a lot of problems down. Now, I'm going to have this conversation with you because, no one's asking any questions. But, Bernanke's thesis for his PhD made a lot of sense. I don't disagree with it. I just disagree with the idea that it hasn't stopped. It should have been run for 2 years, and then they should have slowly walked away from it. Here we are since 2009, and we're looking at, what are we looking at? What year is this now? 24, right? It's been going on for 15 years. It's way over, and it's allowing the politicians to spend more money than they have. So, I'm not against quantitative easing. I'm against it run 24/7, decade after decade. That's what I'm against. Let's see. So I have a board meeting last night, and and I'm the vice chair, and I'm being pulled into a conversation. Sorry about that, traders. All right, so let's go to where are we going next? Let's jump over to the Great Experiment right there. You see, it's calm. So world markets are relatively calm because they're under control by the Federal Reserve. And there's so much liquidity out there, it's shown in the stock market, because the stock market is an afterthought to all these other areas. And then from there, we go to the South African Rand. And you can see the unity government is a good thing. And it does seem to make, let's show you, it does seem to make gold and the metals relatively firm. It's not exactly exploding them, but it's got that upwardly projection, path. Unfortunately, the weekly sell is telling us not to get too excited about it. This could be summer doldrums, where there's no reason to rush into anything. They usually say sell in May and go away, and I guess you could say this year buy and sell in May. Buy, sell, buy in May. Buy, sell, buy in May. And go to the beach. I mean, it seems like there's no real issue going on there when you look at the U.S. stock market. Right there, there's the S&P 500. It's got that great upwardly slope. There we are. All right. Let's see. No one, including cow people and animal control, has gotten within 50 yards. Wow, 50 yards. Well, free. Yes. There we go. All right, so you can see there the stock market's had that nice long glide, just like when they knew that Japan had problems. So, basically, markets have been capitalizing on this nice, slow, steady grind up by the Federal Reserve, and so not bad, not bad at all. And then we go over to silver. And silver's doing the same thing. It's fighting to stay into the buy. Look at that. Just bouncing up and down. It has no... Let's put it this way. There is no heavy conviction whatsoever to take this stuff up. They're just, I have to say, the opposite side, though. There's no heavy conviction to sell it. That's the thing. And you can see here on the weekly, it fell into the weekly sell finally last week. Fast was a few weeks back. And then from there, there we go. So from there, when you look at, this story from Japan, all this is in the market. They know it. And our math picks up all that action. And that's, pretty much why, our math does so well. Because, it's reading the underlying pressures. Anyhow, from silver, we'll go to the other industrial metal, which is copper. You see, it went into the buy last night and is trying to lift up here a little bit. This is the electronic market today. You can see it has that same issue. It's not sure what to do. The fast and the slow joined in together on this one. That was interesting. They broke down right in here and started just, going into the sell then. Probably because, China is so underwater too. And I have read and I have heard that the Federal Reserve tries to help China out too. Yeah. I mean, you got to shake your heads at it. At the same time, they saber rattle and drive us crazy. But then that's more of, Joe than us. Okay. What else we have here? Macaron idiotic Ukraine policy have paved the way for triumph of French right. Yeah, it's like he wants to start a war or something. That's really weird. I thought the left were against that stuff, but they seem to be the ones always starting them. All right. From there, here's a little bit today. It says APAC stocks mostly firmer. Dollar index and crude contained. UK CPI due. Let's see. News squawk. Europe market. Okay, CPI and out of England would be nice. All right, now let's go over to the energy sector. Oh, we didn't see platinum. Let's see what platinum's doing. Platinum's doing the same thing. It's trying to bounce now for the last 3 days. Maybe now that they've got Japan all figured out. I mean, you're talking about an $840 billion company. So, in assets. So they liquidate $63 billion, take care of their problems. See, that's what I'm confused about in China. I talk about it a lot here. They have $20 billion companies and $30 billion companies and $40 billion companies. And then they can't find $34 or $50 million or $100 million. It's like you're you're a $20 billion company. You can't find $200 million to pay your debt. Liquidate something. They must have so many things in China that are like the dark blue, where they will not mature for years, and there's no liquid market to them. All right, so let's go over to crude oil right there. You see the crude oil lifting up nicely. See that right there? And you see, it's been bottoming out. I guess it's at the beginning of the month, when it got down into the 70s. And now we're over the 80s at the moment, and we're climbing into that weekly buy. Over on the beta, it's even more firmer, which is kind of interesting. Let's show you the beta. Charlie Larry right there. And there's the beta platform. And you can see we've been in a weekly buy there 3 weeks now. And you can see we're in the weekly buy again this week too. So, it's that's telling us that there's been a lot of strength in the energy sector for the last 3 weeks. And even with that wild dip back in here, which was, what was that? That was the end of May. And so it created a bottom. And, we've been climbing ever since. Went into the buy there and has been climbing up. 3 solid weeks and weekly buys. It closed in a weekly buy on that dip week. Right there, it closed on a weekly buy. So 1, 2, and actually it closed in a weekly buy. Yeah, I guess it's how. Let's see, where is that at? The 10th, which is really the 7th. Let's identify the 7th. Right in here, 6th and 7th, it closed in a weekly buy there. Let's check out Brent. And there's the Brent looking the same way. 3 solid weeks now. This is the 3rd week starting right there. And, it's fast and slow have climbed up into it. Same thing back on the 6th and the 7th. It pushed into daily buys and weekly buys on that nice big sell-off. I love weekly buys when you on a down week. Isn't that nice? Remember, traders, buy low, sell high, or sell it short high, buy it back cheaper. But buy low, sell high. Everybody gets that one. So, all right. Let's go to. What's next? Let's go to. Where are we at? Let's check out natural gas. I don't know if they're trading today or not. Let's see. Yeah, it looks like they are. Natural gas, the energies are trading electronically. And you can see here. Maybe, yeah, there it is. That's the 19th. 17th, 18th, 19th. So it closed in a daily buy yesterday. It's been in a weekly buy for like 10 weeks. Not much of a change there. And then we've seen already the energy company in Spain. It's pressing down, and I think that it'll probably hesitate down here until they see the parliament start to pass some good legislation. And then there'll be probably another rally down, in other words, another fall. But this alone is showing you that you're not going to be paying every damn penny you have or every damn euro you have to heat your house or stay warm and not freeze to death next year or this year coming up. So that's a good thing. That's definitely a good thing. Actually, it's a great thing. And what else we got going on here now as we go through the energy sector here? I guess that's the completion of it all, really. So we can see what the rest of the world's doing. I'll just go through the stock markets. It's always fun to look at the Nikkei. Nikkei's basically unaffected. If anything, they probably figure, oh, good. We don't have to, sell everything, and so there's not going to be any pressure on the stock. So let's be a little long and collect some dividends. And you can see here, it closed in a weekly sell last week and still in a weekly sell this week. We'll see how that goes. Over on the South Korean, that's doing the same thing. It's rallied up in red dots, no less. And we're still in a weekly buy. Is that? Let's see. Yeah, so this is the second week now in a weekly buy. So it's went into the weekly buy here. So now you can't be short for these last 3 days. It's a neutral now for you. You have to sit and wait until we get a daily buy. There may be still some confusion. Who knows what that bank was invested in South Korea, since it's a neighbor. That type of thing. You have that, what we call downstreaming situation, or domino effect. Usually most people like the word domino. And then from there, we'll go over to Taiwan. There's Taiwan. And you can see Taiwan has been lifting. Minus the Chinese threatening them, they don't really care, do they? And you're looking at going on a 6th day in a buy. And you can see we're going on full 10 weeks in a buy. So do you think they care about all that noise from China? Obviously not. If they did, money wouldn't be pouring in there. Money would be running away from it. All right. And then from there, we go to Shanghai. See what the Chinese are doing today. It seems quiet. There it is, Shanghai. Shanghai's been in 3 green dots for 3 days. It's been in buy for these 4 days, really. Let's just do it like that. It went into the buy here on Friday. Fell and lifted up and then fell again today. And then you look at the weekly and you go, oh, I can't take the long. Because guess what, traders? It's been in a weekly sell now all the way back in, let's see, where's that? Right here. It's been in a weekly sell since back in here. See right there, the 527, which is really 525 the Friday. So up in here. It's been in a weekly sell since this area right in here. And obviously it's found its way to more to go down than up. Again, it's just basic algorithm stuff that's usually right. 8.6 out of 10 times. From there, we will march our way over to Hong Kong. The Hang Seng. Where are you, Hang Seng? HSI. There it is. The Hang Seng, same thing. You noticed it fell. It went into the selling right here, too, the same time right there. But didn't seem to care because it's been more sideways down than down. And you can see on the weekly, it's been just 3 weeks in a sell, going on a 4th week now. And we're starting to try to climb into a buy here, whereas you had, what's that? That's 4, that's 8, that's 10, and I think 11. So 11 out of 12 days it was in a sell. It closed in a daily buy yesterday. Off that red, we have to wait for that to turn green, and that would have been a buy. And again, if it was in a weekly buy, you could have taken the long, but you can't. So you're not short. That's the good part. You're not short for that. That's the good part for today. That action going from 18,000 to 18,500, you weren't short for that. That's a good thing. You're just not long. That's the way it works sometimes. Now, from the Hang Seng, we go over to the next island type economy, and that is the Singapore Straits Times, the STI, right there. And there's the STI. It was rallying that still like that all the way up. Yeah, it was still rallying there, and then it's gotten into a little pressure here. You can see that on the 5th, and it's been breaking down. There's been lots of red dots and selling, but it hasn't really fallen that far. It's like a buyer's strike more than it is a seller's, thing. And you can see it went into the weekly sell on the 10th. So it's really the 7th, I guess it is. 8, 9, yeah. So it went into a weekly sell right here and a daily sell. So you're able to capitalize on that opportunity. Why again, traders? Because we're in a daily and weekly sell. It's like, yay! See if we can do that without having to move it. Okay, there we go. Yay! Math doing it again, as usual. Remember, 8.6 out of 10 times. There's going to be times where you have problems, but it will straighten itself out. And that's the best part about this, especially if you do it smartly with derivatives married to hard delta. If anybody wants an explanation of what that means, just say explain. Just leave it like that, and I will explain. And then we go over to the All Ordinaries Index out of Australia. Cracky, mate. And there it is. You can see we're on a second day of a buy. We are going into we started the week off in a weekly buy. How about that? It's trying to move up. Let's see how that goes after 2 weeks in a sell. And it's been a choppy 2 weeks too. Australia, who knows, maybe it'll start to turn around. And we have to keep on now defaulting to that conversation. Now that Japan has figured out what to do with its 5th largest bank, and it didn't have to declare bankruptcy, it just had to liquidate stuff, and they're propping it back up again. The financial markets could be even more bullish. Yes. Well, when you have the Federal Reserve plowing so much cash in, as I've been saying for months here, it is what it is. And then from there, we'll go take a look at the Nifty 50, which was at all-time highs yesterday. You can see we're 4 full days going on a 5th day in a sell, and it's only drifted up. The only thing that's kept you safe is it was in the weekly buys, and now it's dropped into the weekly sell. So the last 2 days, you could be short. So you'd be shorting here. Let's see, let's do this. You'd be shorting off of this one here, and possibly this one, and possibly this one. And it got down below it today from the short. So it's giving you opportunity. It all comes down to how well you control your position and the tools you use to put on a long or a short. That's what it comes down to. What to do, what to do, what to do. And that's what we're here for. And if you ask, we'll explain it. We don't change pretty much anything when it comes to understanding the markets. We understand them very clearly. They are not an enigma to us. From the Indian Ocean, we go flying over to Europa. Boy, I would love to have something out of Dubai. There must be a Dubai index. We'll have to find what that is and try to follow that. Was that it? Maybe I remember talking about that too. 22222 SR. Whatever that is, it's been getting slammed. Oh, I know what that is. That is the Saudi Arabian Aramco stock. That's what that is. That's what that is. They just floated another $100 billion worth of stock back about a month ago. So this is on our way from the Indian Ocean, we go to Saudi Arabia, and that's the Aramco stock. I don't know if Dubai even has a stock. Let's take a look and see. There must be. I know that Tel Aviv has a stock, and that's a good stock. There's no doubt they have a lot of companies. But it would be nice if Dubai stock index. Dubai stock index. The DFMGI quote. Dubai Financial Market General Index. Okay, cool. Let's see if we can find that and put that in. That would be interesting. And this way, at least we wouldn't be jumping right to Europa, you know. Let's see, where is it at? Let's go right there. But that right there is the Saudi Arabian Aramco stock. Boy, that's been a weekly sell since April. End of April. All right. Let's see. Let's put that in there. Let's make a copy of that. All right. And let's put it in there and see if we can find it. Trading. All right. Paste. Search. Pricing culture crypto flunks or floor index. What the hell is that? No. Paste. Pricing culture. What the hell is that? Let's see. Paste again. One more time. Let's try that. I keep on getting something called some type of crypto thing. Pricing crypto punks floor index overview. What? All I want is Dubai. Let's go back and see what that symbol was. DMG quote. DFMG quote. DFMGI quote. DFMGI. Okay, there we go. We got something now. DFM General Index. DF. Okay, we got a symbol here. And I believe that's the Dubai thing. Oh, there we go. We got a symbol. Let's see if we can get it in there. There we go. This will be cool. Right there. And we go to ticker and we add. And there I am. And then we save. Here we go. Give it a little spin and boom, we're there. And there it is, right there. What's this all about? Okay. Okay. Okay, there we are. Is that it? Still looks like the other one. There's cotton. Coffee. No, it's not updating yet. It says what it is. Well, maybe it is. Maybe that's it. 51. Yeah, that's it. So it's been selling the last couple of weeks. It's been in a weekly sell. What's that? 4 now out of the last 5 weeks. It's been in a weekly sell since May 24th. Since back in here. So it's kind of zigzagged and then broke down. That was probably the pop up. And you can see here, it's been in a daily sell 7 out of the last 8 days. So that is the Dubai index. That's kind of cool. It looks liquid enough. And then from there we'll go to the Stokes. That's not it. Let's go to the DAX. See if the DAX is in there. Stokes is not updating. I'm not sure why that's not updating, but let's try that. It's a holiday, so that has some effect on these things. You see here the DAX is pressing down, and it's in a weekly sell for now 3 full weeks. The CAC 40 might start to rally, if they get their government straightened out. Same situation. This thing's been in a weekly sell now over 6 weeks, and you can see it's been drifting down from it. And then the FTSE, right there, FTSE's got that not wanting to sell look also. Did that topping out like the way Singapore Straits Times has and a few of the other indices, where it's like a buyer strike more than it is a selling thing. You see here it's 3 weeks in a sell now. And then we go over to, we've seen what the S&P 5, let's look at the Dow Jones Industrial Average. Right there's the Dow Jones Industrial Average. It's been 7 days now in a sell. And you can see it's 4 weeks in a sell. So, all right, traders, we're at the end of the webinar here. So I guess we have to come up with a title. I guess we could say Fed bails out the world. That's pretty much what it comes down to at this point. And we'll put that in there. And we'll catch everybody tomorrow, same time, same channel. It'll be Thursday, and America will be open again. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Looks like I'll be trying to rustle some, or trying to bulldog a couple head of cattle in the afternoon. I'll let you know. We'll send you a picture. We'll show you a picture tomorrow of it. All right. So this is Doc from North America, from Cattle Country, saying, yeehaw, traders, yeehaw.